Good day, traders. What's going on? Hope you guys are doing good. And you're welcome once again to Evergreen FX channel. If you're new, please make sure you subscribe. And then make sure you comment, you like, you found value in this content, okay? And we're taking my time. If you're already subscribed, make sure you like, just click the like button below, okay? And if you need more content or you need personal one-on-one teaching, please make sure there is a link in the description below. Just hit it up and gets to me. And there is a free channel, a link in the description for free Telegram channel for you to join the group and learn more about forex trading. So without further ado, let's start with what I have today. The content is just simple, but I want to break it down to a very simple way where you can understand. Let me reduce this volume. Make sure that you understand the order flow of the market on the higher time frames. Alright, which means if you want to do proper top-down analysis, you have to start with the higher time frames down to your entry time frame. Okay, as a day trader, you just need 4 hours, the 1 hour, the 15 minutes, or the 5 minutes for your entries. You still use the 4 hour for directional buyers, the H1 for market or structural behavior or price behavior, 15 minutes for your entries. You know the candlestick patterns you look out for when you want to enter a trade. So this moment, the first thing I would like us to understand is, even though I'm a day trader, I like taking my analysis from the weekly time frame. Why? Because at every weekly circle, there's always a candle close of last week. When it begins this week, there's going to be another level of volume in the market, or the direction of the market might change from the close of last week candle. So I like beginning with a 1 week if I want to begin a weekly analysis. Okay, but if I have already done the weekly analysis and I want to do a daily analysis, it's simple. I just anchor on the 4 hour, because the weekly and the daily time frame has already given me the picture of what the market is, up against, right? Or what I'm up against in the market. So this is why I try to make sure that I have my weekly time frame first, to see the close of last week candle, right, before I see the beginning of this week candle, and what is possibly going to happen in the market, what my expectation should be like. All right, so now let's go into it straight. Make sure you start with the higher time frame down to your entry time frame. But if you've already done the weekly analysis and you're coming down to open it beginning of the day, you can possibly take a look at the daily close of the candle of yesterday and then the opening of today. But if as a day trader, you don't have to do much work. You can do this top-down analysis on weekends, like on Saturday, the close of the week. You see how the week closed, the candle closed, and then your expectation of next week, where price is possibly going to go, or what exactly is going to happen with the pair you're looking at. Right? So in this case now, I will not be writing down the weekly, the daily down for you guys, but I'm just giving you a hint of what to do. Now let's first of all go into the weekly to see what I'm talking about, right? Down to your entry time frame, just a hint on what you're going to do. All right, now let's go straight to the point. Now you can see here, I will advise you before you begin any chart analysis, make sure that you zoom out completely. It's important. This is a weekly time frame. Zoom out completely. Now when you zoom out, what is the direction of this market? But if you look at it this way, yes, even though you say this is a a downtrend, you don't have the full picture of what this pair is talking about, right? So when you zoom out completely this way, this is a whole lot of a downtrend, right? Beginning from here downward, this is a downtrend, right? And this is the impulse leg, the impulse, the correction, the impulse, the correction, the impulse, and this is a correction. Am I right? And then this was supposed to be the next impulse, and that's what we're looking at, right? Your anticipation is that from this point down here, a price will possibly break this low here, then another lower low should be created, and this is a complete downtrend. Lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now we're expecting a lower low. If price possibly breaks this level, breaks this low, this is the last low here. Alright, so this is your expectation on the weekly time frame. Now when you do this on the weekly, you go down to the daily time frame, right? Now don't be confused whatever that you're looking at. Be concerned about where price is. Be considering exactly what, whether the price is where price is it an impulsive wave or a corrective wave on the higher time frame? That is your consideration. Do not look at any other thing. You have done your analysis of weekly, coming down to where price is. We have already known that this is a corrective wave on the weekly time frame. So you're expecting an impulsive wave now, or an impulse leg to be created, right? A lot of noise, there may be waves within waves. That shouldn't bother you. Be concentrating on where price is and how you can take advantage of it. Okay, so now we saw here that the market from here was creating higher highs, higher lows, higher high, higher lows, higher high, higher lows, higher high. Now let me just mark it out straight up. From here to this point, to this point, to this point, to this point. I'm not concerned about any other thing anyway. I'm not into all that right now. So you see from here now, the market broke structure here. You can see that there was a first break. This is the first break of market structure. This is the second break, right? And then market dropped, and then came down here and then found resistance, right? Found support. Sorry about that. From this point, the market found support here and then reversed, right? Market found support at 1.87951 and 1.83382. This is where market found support, right? And market bounced back from here to this place, and then here you can see complete from this point, from 1.8795 is a corrective wave from here to this point. Market was just correcting, right? And then you saw this. Now what you should be looking at right now is nothing else. It's already a downtrend. You mark this as a long-term trend line, a downtrend, and you're looking at, okay, this level now, maybe the market impossibly touched. It might come back here, bouncing here, and touch here. It might not get back to that point. You can equally draw your second trend line from this point to this point, right? And then what do? You go down to the lower time frame, which is your main time frame you're looking at, to make sure that you know what you're doing, right? Now here now you realize that market was exhausting and finally broke structure to the downside and came back to retest this level, right? This is on the H4 time frame, right? Came back to retest this level. So as a day trader, what you should be looking at within this time around is a break of structure and a retest, because the price is retesting here. This is an exhaustion phase, this is an impulse wave, an exhaustion phase. And if you use Fibonacci, let's say use Fibonacci to know exactly where price retested or price retested, or what level price retested. You can see here at 0.5 at 50%. Price came back to at 50% before dropping. So now with this confirmation, right, what you should be looking at now is that you need price to break structure on the 4 hour to confirm that even in the 4 hour the exhaustion is over and price is ready to move in the direction it has to. This is just a correction. You can see how the whole thing is choppy. This is your counter trend line with top down analysis. You can see here that the market broke structure here. This was the first break of structure to the downside, right? And then market retested the order block here. We're not after order blocks right now, but you saw how the market did, what the market did here. Now in this case, now you're looking for your entry, right? And if I pull back the what is it called, the session break, let's see, and know the day we're into and how we can take advantage of it. Now can you see from here? Now one thing I want to tell you guys is, if you're taking trade, or if you're trading as a day trader and you're waiting for your setup to be met like you are a technical trader, make sure that the H4 candle closes before you make any decision. Make sure you allow the H4 candle to close every time you want to place a trade. If you didn't get an entry from the early close of the 4 hour time frame, or you're looking at, oh, market is actually moving, you won't just run down to the 15 minutes, you might get stop out all the times. Wait for the close of the H4 candle and the beginning of the next candle to show you the order flow of the market, right? We see here that the market closed strong bullish to the up and strong bearish to the downside. This is what? It's not any sidebar candle. It's a dark cloud cover, right? Now in this, understanding the psychology behind this candlestick formation here, you know that the market is ready to go down, right? But you don't just go straight into the point. You also have to draw another counter trend line to be broken here. It takes a process, but you have to do the process because that's your duty, right? Now when this happens here, you have this dark cloud formation here, as you said, from the order block here. Now what you need to look out for now is to look out for this day, beginning of this day, what is going to happen. All right, now you go down to the 1 hour time frame now. Now this is the 1 hour time frame, but this is not where you exactly want to take your entries, but it's the beginning of the day. Here, from here the market begins here, and this is the beginning of London. You can see this is the Asian session. If I tap in this, you will see it. Sorry, yes, this is it. Sorry about that. You can see that this was Asian session, and then the opening of London. You can see it. That's not what we're here anyway. Now you see that the market broke structure here to the downside with a strong momentum to the downside, and this is where you should be looking for your entries right now, right? And then what do? You draw. There's a break of structure here. There's a break of structure here, right? And this is the last structure that you're looking at. Maybe possibly the market should break. Now what do? You go down to your entry time frame to look at this very place to take your trade. So your stop loss is going to be very small compared to what you should have been like. Now you can see what I'm saying. You can see it right here. Now what happened is the market broke this structure here. You can see from the you can see it that from here this was the Asian session, the breakout. But before the breakout of the Asian session, you can see there is a pattern formation here. The M pattern is formed here before the breakout, right? And then you realize here that there was a pattern, a candlestick pattern formation here also on the second leg of the M pattern, double top. You can see the double top here, right? If you put a line chart, you will see that this is a double top, right? And then you see how the candle evening star pattern was formed, right? And broke this structure. This is when to be looking for your shorts. Or if you don't need that, you wait for the retest, right? This is a break of the 1 hour structure, and then the retest of it here. You can use this place for your shorts. You can use this place for your shorts. You stop loss above. You're going what? Your stop loss, make sure your stop loss is above a bit. And then here we go, 1 to 3 or 1 to 2.5. 1 to 3, just 1 to 3. You're good. You can see how you got your you were just able to get scale in your profit easily. Very easy. If you don't need that, you can say, okay, let's wait for the retest of the break of the 1 hour structure. And look, and you see here, okay, let's go down a bit. Yeah, one to three. You're looking for those 1 to 3. Just 1 to 3. You can say it as easy as that. Now you're waiting for the next day. This is maybe this is around 11:15 or 12:15, and then you got a trade around 12:15 and you close around 1:30 or 2:30. You're good. You're done for the day, right? And then this is just the simplest aspect of doing top-down analysis. Simple as this. Don't need to stress yourself. Know the directional buyers of the market. Know what is possibly going to happen on the lower on the higher time frame, and come down to the lower time frame to look for your own a trade entry where you can go into the market at ease. All right. And this is when this is done, when you wake up the next day, you don't have to go back to the weekly again, because already the weekly has given you a clear picture of what is going to be. So all you need to do is just every day you wake up, just go to the 4-hour chart or 4-hour time frame, and then look out for your trades. Okay, look out for your trades. You already know the directional buyer, so what you just need is going to the H4 time frame, and waiting for the close of the H4 time frame. You want to trade the London session, you know what it is. You want to trade the New York session, and then you know what it is. Just go to the H4 time frame and you know what is there. Just make your analysis. Like what happened absolutely yesterday was a shock to me. I did the analysis. This was my analysis. This pair. Market broke structure, right? And I was expecting the market to get back to this order block here, right? And then what happens? Or this is liquidity. So I was thinking maybe if it doesn't since it has broken structure, it's going to should go short, right? I was looking at this level. The price come back here, or will it take out? Because if it has to take out this liquidity, it has to get to this point. The price didn't do that. Price moved on. I was right here. I was waiting for the close of this candle. Now, while I was waiting right there, I think I want to do something, right? So let me see how the candle will close. So I was in the 1 hour time frame when I draw my counter trend line. Yes. This was I drew my counter trend line right here. Why did I do this? I did this because I want to get right into the trade when market break this structure to the downside. And retest. When I was waiting on this, I went to my 15 minutes when this candle closed below. This 1 hour candle closed below here. I didn't observe this quick. I was not right there when this happened. These two spinny top candles. I would have gotten into the trade from here, but I was not there when this happened. All right. So when I came, I saw this trend broke, and I was waiting for the retest, and had an emergency that took me out again. I was planning this trade would be my entry point right here. Beautiful setup here. Which I missed. 1, 2, 3. So this trade would have been in. I would have, like locked this profit and wait for next week. This is what I was expecting to do, and I was looking at the market. I was going to make this entry right at the retest of this level, which I missed. I was angry with myself when I came back though, but I had no choice, right? So just be able to understand the order flow of the market. That is the directional buyers. Now go down to the H4 time frame and watch for the H4 time frame to close, the candle to close, and then possibly go to the 1 hour time frame to look at the price behavior, understand, and then scale down to the 15 minutes for entry. Why I didn't use bar replay is because most of you do not have trading view. You're having normal MT4. So if I begin to cut here, you may not understand what I'm doing. So I do it practically for you to see how you can do top-down analysis without having errors. Everybody has his own concept of trading, but the fact remains that if you understand the best way to do it, you always have. Don't expect to always go first in the market. You want to take sniper entries. No, every entry is sniper based on the fact that you have your own strategy and how you follow the rules. If you don't have rules, then you are not trading, you are gambling. So this is just a simple content. I want you to just look at it, be able to sit down and dissect it, digest this whole information. All right, and make sure you understand every pair you want to. If you want to just be trading one pair, please concentrate on it. Make sure you understand everywhere or anything or any information you need to know or understand about that very particular pair. All right, so that you don't make mistakes when you want to sell, or buy or sell or go into the trade using that pair. All right, this is just a little information. All right, so guys, see how I missed my trade here, right? It's just a piece. All right, if you're expecting more content from next week, I'm sorry for not posting up something for some time now. I've been very busy with work and all of that. So see you guys in the next video. All right, take care.
Mm-hmm.